Just last week, we saw a lot of volatility when it came to the stock market. Big tech lost over $1 trillion in value. Amazon had a recent drop of 10% in one day. There's been a lot of fear around AI spending. This is a look at the S&P 500. You can see here on February 5th, a huge drop and then a rebound. And today it's dropping again. This is what investing looks like. So how do I go about investing when the stock market looks like this without getting overly emotional? I don't panic. I don't chase. I'm putting the work in ahead of time. I'm not allowing investments into my portfolio that have not proven themselves, that don't have the fundamentals. And so today I'm going to be sharing some areas that I am focused on investing into over the next few months, primarily momentum, growth, and some individual stocks that I have a high conviction in. So if you're newer to investing, you have to be ready for swings like this. You have to be ready to give your investments time to build and grow. Stick to funds that give you broad diversification. And if you are going to incorporate those individual stocks, make sure that the business is strong, the balance sheet makes sense. What they provide will be in long-term demand. So you won't think, why is the stock market crashing? You'll just ask yourself, let me see what's going on right now. Has something changed? This is a mindset that'll keep you calm through these times of volatility. Now, first, let's take a look at SPMO. This is focused on momentum. And what is momentum investing? It means they're focused on owning stocks that are already showing strong upward price trends. This fund, Invesco's S&P 500 Momentum ETF, automatically rotates into the strongest performing S&P stocks based on that momentum strength. So it focuses on the top 100 companies in the S&P 500. So by incorporating this ETF into my portfolio, SPMO is tracking the leaders for me. Right now, tech and semiconductors are dominating when it comes to performance overall. Even with the pullback, momentum keeps me aligned with the strength of the market. Currently, the highest weighting in this fund are in Broadcom, Nvidia, Meta, Chase, and Walmart. And when it comes to SPMO, the current stock price is $118.56. Now, the next area I want to take a look at is growth. And for me, that's FSPGX, Fidelity's large cap growth index fund. And what does growth mean? It's companies that are reinvesting heavily into expansion, whether it be AI, cloud, data centers, innovation. As we can see here, the top holdings: Nvidia, Apple, Microsoft, Broadcom, Amazon, Tesla, Meta, Google, Eli Lilly. These companies aren't just profitable, they're expanding aggressively. These are the kind of companies I want to have exposure to in my portfolio, even after $1 trillion tech wipeout. I want quality growth that I can feel secure with holding on to long term. So whether it's an ETF or a mutual fund, they give me exposure to those industry leaders without having to pick just one. This is a more focused fund that I felt complemented the position that I've already built up into FXAIX, which gives exposure to the S&P 500 companies. And when it comes to FSPGX, it's currently $44.79 per share. Next, my current challenge investment is SMH, the VanEck Semiconductor ETF. So this is focused on AI. Those AI chips are fueling everything. Amazon just announced a $200 billion AI spending plan. Microsoft is expanding with its Azure AI. Everything requires chips. Nvidia's earnings expect them to grow by 60%. All of this ties back to chip demand. And so right now, I've committed to $10 daily into SMH, a fund that gives exposure to Nvidia, Taiwan Semi, Broadcom, Micron, Intel, and other companies, so that I don't have to invest into so many individual companies and not have to bet on the performance of just one. I'm owning the whole ecosystem. And this is a vector that may go through periods of high volatility, but I'm ready for that. And when it comes to SMH, this current share price is $409.39. Outside of those funds, some individual stocks that I also will be concentrating on in this first half of 2026 are Microsoft and Amazon. Two companies very focused on AI and cloud infrastructure right now. Microsoft with its Azure and Amazon with its AWS are both dominant in those areas. And yes, Amazon has been having its struggles, but all of that massive AI spending that they plan on doing is because they're trying to build for the future. A couple of other individual stocks that I want to gain more exposure to are two chip leaders, Nvidia, as well as AMD, companies with strong revenue growth, market leadership, and a real demand for what they produce. When it comes to my investing, it's not random. It's what I am building, capturing different strengths when it comes to momentum, growth, the semiconductor sector, and a few individual stocks that I have a long-term conviction in. I'm striving to build a portfolio that I am comfortable with, so when the markets get volatile, I don't ask myself, should I sell? I'm just focused on the fundamentals of the company and having a true understanding of what's going on right now. Is the demand still there? Is the balance sheet still strong? And then sometimes I have to give my portfolio a little time to recover or truly just take off when it comes to certain investments. And yes, the individual stocks that I named are within the funds that I mentioned. So there's overlap there, but I'm okay with that because of the methodology behind each fund and the direct exposure that I want to have into these companies for that growth potential. SPMO weighting is based on momentum. So it's going to increase the exposure to the stocks, showing that strong price leadership, while FSPGX is weighted based on the growth characteristics, companies that are reinvesting and focusing on expanding, and then SMH concentrated specifically into the semiconductor supply chain. So even though we see big names like Nvidia and Broadcom, the reason that they're in the fund and the weighting that they carry are all different. And this is my strategy on having me on track for growth in my portfolio. So today was a look at what I'm currently focused on building up into my portfolio and how I manage during these volatile markets. If you're not already, subscribe, like, hit that notification bell, share in the comments. Are you invested into any of the funds that I touched on today? What are you focused on building up in your portfolio during Q1 or the first half of 2026? Momentum, growth, a particular sector, or your core, as well as all of those areas all at once. Let's talk about it in the comments. Thanks for watching. Okay, bye.